Now, talking about the review of all of these more analytically, we've got Adedayo Bakare, who's a research analyst with Afrinvest here with us on the program. Good morning, Adedayo.
Thanks for having me.
It's a brand new week. I do hope it's going to be bullish for us all in the markets, equities, and across the bonds and treasury bill side of the market. But let's begin with your own side of your perspective, basically, of the market last week. How would you say things, went? It was bullish at the fixed income side of things, but for equities, it was not too good. What were the drivers?
Well, for equities, it was mainly, there were a lot of company-specific news which affected performance. Like you rightly mentioned, news around Seplat, affected the stock and pulled down the oil and gas index. You'd also see that also we had very large cap stocks lose last week, and that was due to gains that they've accrued over the preceding week. Yeah. So the likes of Guarantee, the likes of Zenith. So we believe there's a bit of profit taking activities in some of the stocks. So mainly company specific news, profit taking activities was mainly what we saw in the market. Overall, the sentiment in the market also remain bearish. There's based on our in-house tracker of how strong sentiment is during the week. Last week we saw a moderation in the index, and we think that is due to still the climate in Nigeria, which is still not suitable for investing in equities.
So in essence, what you noticed wasn't so different from what we actually found at Charles.
Absolutely.
Okay, great. So let's talk about some of the earnings, and of course a bit of forward guidance now into the new week. UBA's numbers actually came in on Friday, and things were quite impressive around this particular company. Gross revenue rose by some 13.9%. You got profit before tax, profit after tax up by 20 and then 29% respectively. And of course, 20 copper dividend is coming on board. How much of reaction are you expecting from traders, investors this week? And is it likely to shape things for us this week?
Yeah, I mean, for UBA the stock has been badly bruised over the since the beginning of the year. It's not doing very, very well. And based on our projections, dividend yield is in double digits currently. Right. It's actually offering one of the best, yields in terms of dividends compared to tier one banks or even any bank in Nigeria. So it's very, very good. We believe investors should actually look to, buy into UBA stock. Overall, what was interesting about the performance was even though compared to other tier one peers rather, you saw that there was an expansion in interest income, and there was also a very strong expansion in non-interest income for UBA. But interestingly, one of the drags which we continue to see in the performance of UBA is operating costs, which is still very, very high. Right. And also when you think in terms of interest expense, it's also very, very high. Interest expense grew by more than 20%. Yeah. In comparison, what actually helped GT Bank in half year was actually a moderation in the company's interest expense. So we believe that is one area where where UBA has to improve upon. Overall, it was a very good outing for them.
Okay, this is a tier one bank, and I think before we move on, we should also touch on Access Bank, which announced on Friday that the half-year numbers are still being put together. Of course, the delay is due to the mergers between them and Diamond Bank, and so it won't be later than the 15th of this month, which is September. What are your thoughts on this particular company?
It's not unexpected. According to the market regulations, you have up to 60 days when the financial year ends to present your results. Okay. But most of these results have to go through approvals as well. The CBN has to look at it, which is the primary regulator of the banking industry. Right. And in light of the merger between the former old Diamond Bank and Access, and all sorts of accounting issues that have to be considered. Yeah. And when you take into when you recognize that also this books being presented is actually going to be audited. So it's basically auditing the operations of the old Diamond and the new Access, and looking at ways to combine the numbers. Then you expect that maybe there are some issues around that, but hopefully we get to see the numbers very, very soon.
Are you sure those two key banks under the tier 1 sector now will be able to meet the LDR of given the deadline, which is for this month?
Well, it's going to be difficult, obviously, and I believe it's not going to be drastic in terms of achieving it, because the regulation actually came late into the year, and these banks have drawn up their strategy at the beginning of the year, so it's actually not going to be easy for them to reverse course. However, we see a situation where banks are actually improving lending through newer initiatives. You see the Access Bank, you see GTB2 extending consumer credit. Will this be enough? We do not think it's going to be enough. However, we believe there should be a bit of forbearance on the part of the CBN once you see that they're working towards.
Do you foresee any form of extension in any case?
Yes, I believe. I mean, if they don't if they don't meet it, you can only help them to adjust, and they've shown a consistent pattern of improvement.
I also believe you've also seen Fidelity Bank's numbers. I mean, they had a moderation in their NPL ratio by some 30 basis points. What do you make of that?
Fidelity too was a good performance. Right. Interest income, the top line was good. There was an expansion in interest income. Okay. However, the also major source of pressure was in terms of interest expense. Right, it was a very strong increase, and that affected the net interest income of the bank. Also, when you think in terms of operating expenses, it's also very strong. There was a strong increase for Fidelity, which affected performance a bit. However, the positive news mainly was in terms of impairments, loan loss provisioning, which was there was actually a write back during H1 2019, which was very good for them. And overall, when you look at the bottom line, it was a very strong performance for them. So it was a good outing for Fidelity as well in the first half of the year.
I think they're even trading at a premium higher than their peers like FCMB at this point in time. A bit of the consumer goods segment before we move to the fixed income, where we'll wrap things up. Our consumer goods sector of the market now, we saw PZ numbers trickling in on Friday as well, I think. Even though we saw a little bit of traction on the share price, capital appreciation on Wednesday, I guess, when it actually shot up by some 10%. What did you make of that, in spite of the 15 kobo that they are posting, the revenue and sales, everything on that? The key metrics were really down.
It was not a good performance at all for PZ. And one of the major reasons is what we've cited several times. Consumer spending is still very weak in the market, and the intensity of competition in the consumer goods space
doesn't mean folks are no longer buying Imperial leather, some of the other.
Well, it doesn't mean that they are not buying. It means that maybe they are switching to informal alternatives, for instance, that are cheaper due to pressed wallets. So that could be, a substitution that is going on in the market, and formal players are having to contend with all these issues. So when you think in terms of the revenue moderated by around 8%, right, and cost of sales was very high. And when you think in terms of putting both together, you look at the gross profit of the company, and you see that it was down sharply by about 30%. Operating profit was down by around 70%. Bottom line was down around 36%.
But in spite of all of this, they're able to propose some 15 kobo dividend.
Absolutely. It depends on the strategy of the company. Right. Not all companies. You have retained earnings. You can pay dividends out of retained earnings. Okay. You can also pay a bit. They made profit. They made a profit of around 1.2 billion from 1.9 billion in the same period of 2018. So it was a very sharp moderation. But we believe there's still an allowance for them to pay dividend. And if you notice, the dividend was weaker, 15 kobo. This period of last year, it was 20 kobo. That was paid.
Was it? Oh, okay.
Yeah, it was 20
okay, so let's talk about the fixed income side of the market now to wrap things off. The preceding week we saw yields climbing, skyrocketing seriously, and all of a sudden this week we saw a bit of decline. What happened?
Liquidity. So there was a very strong increase in liquidity in the market this week. Last week. And that was because of maturities you have in the market. So there was over 300 billion of maturities, which was very significant. And also, if you notice, in the previous week, foreign investors have actually shied away from the market a bit. And from the OMO auctions we saw during the week too, you see that investors were demanding for higher rates. And you will see that for the OMO auction, for the primary market auction as well, there was a gradual increase in rates at each of the auctions. So we believe it's really just a bit of, the improved liquidity in the system, which was actually very, very strong, in increase in liquidity, as well as a bit of foreign investor participation due to gradually, the increasing rates we're seeing in the market to compensate for risks.
Because again, in the preceding week, I mean, we saw yields at about 14%, which is really attractive. So was it that they reinvested some of those coupons?
Absolutely. Once you stay off the market and you're not buying, there are going to be sell-offs. And once you have sell-offs in the market, you have yields rise. So basically, we feel they stayed on the sidelines, and we saw a bit more participation last week, and that was what led to an increase in demand and the consequent moderation in yields that we saw.
So do you foresee buy sentiments, buy interest to increase again this week?
This week too, we're expecting, it really depends overall on CBN's operation in the market.
Okay.
And we're expecting also a lot of OMO maturities this week generally. And so everything, the direction of trading would mainly depend on what CBN comes out to do. So if we see a very strong, a very aggressive mopping up of liquidity, we could see rate inch slightly upwards. But if CBN is a bit less aggressive in its stance to, mop up liquidity, then we could see a further moderation this week.
External reserves is down to more than 5 months low now, or some over $1 billion, yes. $1 billion actually was wiped up. So I guess the strategy on the part of the CBN will continue to be that of tightening.
Exactly.
Anyways, Adedayo Bakare, thanks a great deal for your time. We appreciate your insight on